Multi-millionaire stock trader discloses his winning strategy. Worth $240 million, Charles is a master investor and an expert of Middle Eastern geopolitics. His illustrious career as an investor and presidential advisor began with only $200. Charles was down and poor when he decided to get a full understanding of the Middle Eastern business and Wall Street Journal. By burning the midnight oil, Charles became an expert and began to offer his guidance for free. He developed a strategy that predicted how stock market worked. During his startups, he believed the market worked in waves, as the bulls and bears made their mark on the market. He first started with stocks, then Forex and crypto. His strategy on the market is very easy and simple to apply, as I will be showing you the exact methods he used and how to trade them on the financial market. But before that, I want to introduce you to our backtesting service, as it makes it very easy and saves you time when backtesting your strategy. Thousands of traders are using Trader Edge to get an edge on their competition. It also has a lot of features that would definitely take you one step ahead of your trading career, just like the position calculator that serves as a great tool for risk management. Are you not sure how to backtest? No worries, you will also get a full step-by-step backtesting plan which has a $100 value. Not sure how to build a profitable trading strategy? No worries, you'll also get a full course on how to build a profitable mechanical trading strategy which has a $270 value. And if you sign up right now, they'll even throw in 4 pre-made high-quality strategies that have a $100 value. That's $470 worth of bonuses, all for free. But only if you sign up right now. Trader Edge has a 7-day free trial, so there's absolutely no risk. Click the link in the description below. Do not forget to smash the like button and subscribe, as it motivates us on the hunt for the Holy Grail. Okay guys, in its simplest form, before we dive into the strategy, let me give in details how his strategy worked. First off, he made note that his strategy makes use of market volatility, as he tries to identify when change of market direction occurs during a high volatility period, in combination with break of market structure, as high volume tends to be the driving force to making profit in the market. And the little extra tip he gave out was that he would only risk his money if he was willing to get 3 times its value. Now before we move on, we went deep into research to find the best indicators to suit this trading style. After a lot of digging, we finally ended up with this 2 indicator. This one right here would be serving as our momentum gauge, as we would be using it to determine the volatility of an existing trend. While these lines you see on the screen are divergence highs and lows. Now to add these indicators to your chart, bring up the indicator panel. Then search for the ADX and DI by Kabuoyaji. This one right here. Now for the second indicator on the chart, search for the oscillator workbench by Lux. When you add these 2 indicators, you'll get a lot of reading on your screen. But to use the settings we used, then use few minutes of your time and go through the settings we used for these indicators. Make sure you adjust yours properly, as one mistake could give you the wrong reading. Now for the first indicator, these are the settings. And for the second indicator, these are the settings. Let me now quickly go over the conditions for a valid buy and sell signal, as well as errors to avoid if you must use this strategy. Now for a buy signal to be valid, we first need to see this ADX cross above the 40 threshold line, as this shows there is a strong ongoing trend. And if we look on the chart, we could notice that we are on a strong bearish trend, as we can see the candles on red. At this point, we would have to wait for price to create a new divergence while our ADX is above the 40 threshold line. Now we notice we just had a new divergence level from this candlestick. At this point, we would want to see price action close above the highs of the divergence. We got the close of the candlestick at this point. Before we go over the take profit and stop loss levels, let's recap on why this trade was valid. First off, we had a new divergence while ADX was still above 40 threshold line. Secondly, you can easily identify the current trend by the color of the candlestick present when we had the cross above the 40 threshold line. As this indicates, we would be hunting for a buy signal because if price could break the highs of a divergence line during its strong trending momentum, then know that we are likely to experience change in price direction. Okay traders, for this trade, we would open a buy stop order at the peak of this trigger candlestick. Now for our stop loss, we would be using the lows of this new divergence, and take profit would be 3 times the risk. And we see it was successful. Okay guys, now notice that here, we had our ADX above threshold line at this point. We then waited for our new divergence lines. And when we got these lines, we can see that as we waited for price action to close above the highs of this line, we did not get any. Notice that the ADX closed back below the 40 threshold line, and our existing divergence level stopped at this point. We would therefore wait for new conditions to be met, as we would not be taking any trades here. So we see we got a valid entry here, as we can see we have the red candles present while we got the ADX above the 40 threshold line. And we see we are already in a new divergence level while our ADX is still above the threshold lines. We would therefore place our entry at the peak of this trigger candlestick. Stop loss at the lows of the divergence, while take profit at 3 times the risk. Notice our trade was not triggered till the end of this divergence. Therefore, we would have to close this trade and wait for new opportunities. Exactly the opposite is true for a short entry. First, we need to see this ADX cross above the 40 threshold line, as this shows there is a strong ongoing trend. And if we look on the chart, we could notice that we are on a strong bullish trend, as we can see the candles on green. At this point, we would have to wait for price to create a new divergence while our ADX is above the 40 threshold line. Now we notice we just had a new divergence level from this candlestick. At this point, we would want to see price action close below the lows of the divergence. We got the close of the candlestick at this point. Now note that it doesn't matter if candlestick is still on green, we just need to see the close below the lower divergence. We would therefore place our sell trade at the lows of this trigger candlestick. Stop loss at the highs of the divergence while take profit is at 3 times the risk. And we see it was successful. I hope the strategy was well understood. Please make sure you double check your indicator setting if you must use this strategy. Let's now go over the back testing of this strategy. We would be using an account size of $1,000 as we would be going over 200 trades as well as risking 1% of account size on each trade. Let's dive into it. Okay traders, so we just finished the back testing, and we can see that this is a highly profitable winning strategy. We had a win rate of 53% for 3 times the risk-profit ratio. And out of 200 back-tested trades, we made 224% return on investment. And I found those trade setups within 4 months. Although commissions and spread fees were not included during the backtest, so you definitely want to expect that number to be lower. If you take a look at its risk factor, you should expect to have some few losing streaks, but the winnings outshadow the losses. So yeah, traders, I'm definitely happy with this strategy. So make sure you apply the settings properly when using this strategy. Let's now compare the strategy to some other strategy backtested on this channel. In terms of return on investment, this strategy is really perfect, although not the most profitable on the channel. 224% return on investment is super amazing for a short-term trade on a 5-minute time frame. You should probably test this strategy out if you want monthly profits from the market. If we take a look at the win rate, which is probably one of the most important metrics, we can see that the strategy is good as well, as it made 53% win rate within a short period of time. So make sure to add this to your trading arsenal. So yeah, traders, definitely give this strategy a try, and make sure you do the proper back testing and forward testing before trading live. By the way, if you have any strategy you would like to try out, please let us know on the comment section. Also, feel free to check out my other videos on our channel. I have playlists with different strategies and indicators that will definitely make you a profitable trader. All I ask for in return is to give this video a big thumbs up and subscribe to the channel, as it is absolutely free. Thanks for watching, and see you in the next one.